Hi everyone. I wanted to talk a bit about break-even costs for gold miners. I have been pimping up this Excel with a lot of automation, and I think I have transcended everything now. Every single uh, data point here is a formula almost. So free cash flow is a formula. Leverage is a formula taking into account the gold price, which is coming from the internet with a click of the button. EV to free cash flow is also a formula, also using the gold price that's coming from the internet. Even the break-even cost now is a formula using all of these parameters, right? So yes, the break-even cost can change if any of these parameters change. So how did I do this? Well, break-even cost um, is the gold price, where the free cash flow is going to be 0. So if you have this line here, for example, then the break-even cost is the intersection of 0 with this line, and that's around 1300. So that's exactly this number for 2025. Yep, that's the 1243 somewhere here. So I have also automated the share price, which is coming from the internet. That's this table. So with a click of the mouse, I can now update everything. Break even, EV to free cash flow, leverage, share price, and gold price, which is coming from another table somewhere in this Excel. And now we can play with this. So just to show you, I can click on refresh all, and then the whole sheet will be updated. You can see the numbers change eventually. If you look closely, it will change at some point. It's now refreshing the whole sheet. Gold price is changed. Share price will be changed. Break-even cost calculation will be changed. Even this chart will change, but you need to wait patiently. At some point it will change. Leverage EV to free cash flow will also change. So I will be up to date um, every day by just clicking on one button. All the gold miners will be updated, and I have an overview sheet of that as well. So let's wait a bit, see what happens. Look at the numbers. 1532, 1243, market cap 61, 0.63, EV to free cash flow 3.8, leverage 6.6. What will happen? Still refreshing. There are a lot of gold miners to refresh. And we have the result. So share price went up to 0.64, market cap up 62. What was this, 6.8? So the leverage is down because the market cap went up. EV to free cash flow also went up. So you see how this changes real time. Okay. Now we can play with this. We can play with this. So there are different scenarios that we could look at. Let's say the tax rate goes up because Colombia wants to tax Soma Gold more. Let's say 45%. Look what happens. Look at all the numbers. Break-even cost 15332, 6.5, 3.8, and everything changes. So the break-even cost now went up because higher tax rates. So now it's 1561, break-even 1265. Okay, the leverage is higher now to the gold price. EV to free cash flow also up, so that's not good. That makes Soma Gold overvalued. Let's go to 50%. Yeah, EV free cash flow up. Leverage actually went down because the royalties go up. And break-even cost is still okay. It's still manageable. They can still make money at this level. 2024, we still have a break-even of 1,300. Even if the tax rate goes to 50%, let's try 60%. Okay, so now it's still okay. Break-even is still 1,350 for next year. So no problems if the tax rate keeps moving up. EV to free cash flow is a bit high now at 7. So not a lot of upside anymore if they increase taxes to 60%. So a very nice Excel. Let's take 100%. We tax everything. What happens then? No earnings. Everything goes negative. So good way to do some sensitivity analysis. Let's try interest. They will pay off their interest. What if they paid off all of the interest? It goes to 0, possibly by next year. The whole curve shifts up. You see that? EV to free cash flow will be 3 by end of next year, going to 2.7, going to 1.5 in the long term. Very cheap with the current share price, with the current gold price as well. So if they manage to pay off all the debt, this is going to be a very cheap EV to free cash flow of below 3 at 47,000 production, which is at full capacity. Break even, what happens with the break even? So it was at 1282, 1243. When that is paid off, it goes to 1144 and 1124. So about $100 less break even. So that's good. That means that margins are improving. So this interest payment is really important. They need to pay off their debt, and they are paying off their debt. So they are now currently paying off debt each month. October, they already did some payments. What if the all-in sustaining costs go up due to inflation? That's possible. Let's say next year we go to 1,100. Then of course the break even goes up, right? And break even takes into account a lot of things, also capex. Capex is very important, should also be counted in the break even cost. What is capex? For example, when you drill holes, that money is gone. That's money that's going into the property. That's cash that is entirely gone. You will never get it back. You cannot pay shareholders. You cannot pay off debt. That's gone. So capex is really important. Let's say they do a massive drill program of double 16. What happens then? You see that the break-evens go up. So that's not good. If you drill too much holes, break-even is moving up and you will have difficulty to generate cash flow because these numbers are free cash flow numbers, taking into account capex. So important to look at capex. If you hear a company say that their capex is doubling, then I can just plug it in. I just plug in the number and I will know what the break-even cost is of this company. I will also know what the EV to free cash flow is. So higher capex will give us higher EV to free cash flow. So it's not that cheap anymore. Let's put it back to 8. And you can see that it goes back down, EV to free cash flow. So these are numbers that can change each quarter. So you need to follow this up. Production as well. Let's say production in 2025 is never going to 47,000, but it stays at 40,000 or even lower, 35,000. Something happens. What will happen to the break even? Break even goes up to 1,300, right? So all of these parameters are linked to each other and will influence break-evens, EV to free cash flow, and leverage. And the great thing is it's all automated. One click of the button and I will have my super sheet, the gold miner EV to free cash flow sheet that I can update each day as I please. I will have an overview of all the gold miners and I will know which ones are the cheapest. Soma Gold is cheap. Where's Mako Mining? It's here. Also cheap, 3.6. These are of course also cheap, but they are not that good because there are also other parameters. For example, leverage. I can just look at the leverage. And highest leverage is still Soma Gold at 6.6 leverage. Mako Mining is 3.3 leverage, not that good, but good enough. But if you take, for example, some of these are low leverage. Like Fortitude Gold is low leverage. That's why I don't buy it. I want to have super high leverage. Soma Gold, 6.6 times leverage. That's what I want. And we also look at break-even costs. And by the way, I have put them all here. So these are referring to those other charts here with those formulas. And I will have the most up-to-date break-even cost with a click of the mouse. So here we have our break-even cost chart. Of course, we take the ones with the lowest costs mines, and the lowest is Mako Mining, which I wrote an article about today. So 900 break-even costs, very cheap. It is the cheapest one of the list. That's why I have some Mako Mining in the portfolio. Soma Gold is, yeah, it's also one of the lowest quartile producers. Newmont Mining, for example, is now the highest cost. Please do not buy Newmont Mining. It has the lowest margins ever. It has the highest EV to free cash flow, overvalued, and it has no leverage. So all the bad things are at Newmont Mining. Same with Equinox Gold, no margins, high EV to free cash flow, and leverage is 2.8 is not bad, but there are better miners with more leverage. Okay, and there's also mine life that I added here. So a very nice Excel. It's now perfect. Everything is automated. Now maybe the next step would be to have an update automatically of the AISC, but I don't know how to do that. I really don't know how to do that. The all-in sustaining cost, you can scrape it from news releases, but I don't think there is a way to do that consistently. CapEx is also difficult to do. Every company will report it in another way. So these things need to be done manually. Tax rates need to be done manually, interest payments as well. Shares outstanding, yeah, can also be done manually. It's not like it changes constantly. So that's it. Just a small update. By the way, Soma Gold had earnings. The earnings were good, almost the same as the previous quarter. So not a lot of change. It's still making a lot of money at 3 times to 4 times free cash flow. So we wait for the mill move and let's hope it comes fast. I'll see you next video. Bye.